Welcome back, everyone, to the Bank Customer Experience Podcast. I'm joined by a good friend of the show, Mack Turner. He's a marketing and insights analyst and consultant, and a good friend of the show. So great to have you on, Mack.
Always wonderful to be with you. Great to be here.
Perfect. So the topic for today is obvious. We're going to be talking a little bit about AI, a little bit about community banks, and maybe if it's a little overhyped. So to get right into it, let's talk a little bit about how the big banks are using AI. If you could characterize how big banks are using AI, how would you say they're using it in your opinion?
Well, at scale, the large banks are using AI to augment, not replace, human judgment, at
Hmm.
least for now.
Right.
Take JP Morgan Chase's Index GPT, for example, which helps investment teams build thematic portfolios. AI does the heavy lifting, it does the data analysis, but the advisors still make the final decisions. Bank of America's Erica, which has handled over 1.5 billion interactions, frees bankers to focus on more nuanced advice. And at other large banks, they've taken a risk management perspective. So Citibank and HSBC are using graph-based AI to detect money laundering networks that humans may not have been able to catch. In short, the industry has learned that when AI automates the back room and amplifies the frontline experience, it scales human capabilities, it amplifies human capabilities, and trust in those processes will follow. The same principles apply, and maybe even more powerfully, when we think about community banking.
Yeah, that's a really great point. And I like how you brought up they're not replacing people for now. The main focus is trying to shift the employees' focus to more advanced protocols and techniques or making the final decision. So
Exactly.
since you
Exactly. When you think about how much time it takes just to do the research, when you
Mhm.
really need to be thinking about the quality of the interaction, the AI can be liberating. Please go ahead with your question.
Yeah, yeah, and I agree with that point. I think it by cutting down the time that makes the experience better because their customer isn't having to wait to hear back for an answer. But since you brought up community banks, I want to ask, what about community banks? How are they using it, or how should they be using it if they're not using it to its full potential?
Uh, Really excellent question, and really, really important question at this point in terms of staying competitive, being competitive. Community banks don't need giant data science labs to benefit from AI. Many are working with third party providers to craft customized solutions. They're finding success with AI by allowing the local bankers to serve the customer better in those one to one interactions and allowing the AI to manage the heavy lifting, the back room type of work. So, for example, Texas National Bank uses an AI check fraud detection system that flags suspicious checks in real time, protecting customers and letting bankers focus on the relationship instead of on investigations. Signature Bank of Georgia combines similar AI fraud detection with case management automation for AML and allows the AI to do the prep work while the human makes the calls on what they think is actually a real incident and what might not be. This this approach is can be thought of as selective adoption, and for the community banks and for the large banks too. But pick two or three use cases and then run those use cases to make a clear link between the AI and economic outcomes like ROI. a lot of the press we've been seeing in the past literally few weeks have pointed out, well, was there really any juice there? Was this worth the squeeze? And a lot of the use cases that have been experimented with can be somewhat convoluted in making the connection between the application of the AI and the economic outcome. I would suggest that smaller and community banks have simple, direct use cases between the application of the AI and the economics that could come out of it. So things like fraud detection, small business credit triage, predictive marketing, and make sure that they support the banker and are not substitutes for the banker. So, in reality, I think smaller institutions are proving that AI can be applied at scale and can be a supplement, a amplifier of local judgment.
Yes, that's a fantastic point. I like how you point out using it small and using those small use cases and not allowing it to replace totally the banker because we can see sometimes where an over reliance on AI can cause issues, especially if the AI, messes up or something like that. So
Exactly.
I want to talk a little bit about the branch level. So would you say has AI changed the role of the banker kind of within that local branch?
I think it will, and in some cases it is. And in at least in the models we're seeing today, where the AI isn't being used to replace the banker, but the AI is being used to allow the banker to have more direct relationships with their customers and allow the banker to become an augmented advisor. The AI can be amazingly helpful. So, an example is Veribank in East Texas. They deployed a conversational AI that handles common customer questions and preps background data before the human conversation even starts. That means the branch associate spends more time discussing mortgages, business growth, or financial planning, and less time answering repetitive questions like, what's my balance? Similarly, Credit Agricole uses an AI agent to process simple requests so staff can focus on being empathetic and solving problems. The theme is consistent. AI manages information, bankers manage relationships, which lead to the broader point. AI's value depends on how humans use it and not how clever its code is. I remember I remember working in a lot of commercial situations where one of the strategies was to have a quarterly or annual review with commercial customers. And the banker was to sit down and know everything about that company and its relationship and have great recommendations for where that company could go and how the bank could support them. That's amazingly time consuming when you have a big portfolio. AI is going to make things like that so much simpler. So the banker will be very well informed and the customer impressed with the quality of the relationship the banker and the bank brings to them.
Mm, I agree with that. Absolutely. All very great points. But we talked a lot about AI, and I want to shift a little bit to talk about the hype surrounding AI. Because I remember much like with the internet, back in the early days of the internet, they would have all these grand predictions and say this is going to solve the issue of misinformation forever. And we've certainly seen that that's not the case with the internet. So I'm curious, do you think is AI overhyped in any way as a banking tool?
Well, if you are hyping it, yes, but it's not overhyped when the applications are grounded in reality. So let's look at another example. First Federal Bank of Kansas City shows this well. They partnered with a third party to use AI-driven credit decisioning. The result, their loan volume jumped from $500,000 to over $12 million a month. And bankers gained faster, clearer insights to guide the customer. Now, that also allowed them to expand their footprint to a much broader perspective, way beyond just their local market. Now, for me, that's not overhyping. That is successful application. So those people who want to say, oh, this is going to replace the banker or this is going to replace everybody, I think that is overhyping. But when you have really clear, purposeful, intentional use cases, it isn't overhyping. It is very progressive.
Right. I love that you're using examples to support your point. Really appreciate that. So I want to lean into this idea of how branches are transforming because we've been talking for years now about how branches are pushing for a more personalized experience. They don't want to have those lines anymore. They don't have those windows. They want to have a banker greet you, bring you in, know about you, all those things. So we see that they're pushing for more personalized branch experiences, but we also see the push for more like AI generative tools, kind of like to provide all this general information. How can we explain this paradox in your opinion?
Well, it doesn't have to be a paradox. Digital handles the routine. Branches now handle the moments that matter. And we've seen that. We've seen that even before the AI, right? We've seen digital types of activities and online banking and mobile banking allowing the customer to do those what's my balance kind of activities. I need to transfer money. And what that has done is shifted the branch to be much, much more focused on highly emotional, high customer involvement types of needs. So, small business banking, the first mortgage, the fraud recovery, all those things are very high emotion and requires the banker to do more than just satisfy the customer's need. It allows the banker to accept responsibility and accountability for the customer's need, lifting the burden off the customer. Now, you and I have discussed in the past that this movement from a lot of transactions with a little emotion to a few transactions with a lot of emotion puts a real burden, a stress on the banker. So, one of the things I do recommend is that the banks recognize that our branch staff is handling many, many more high emotionally engaged activities. And we need to make sure that we're offering the training and the emotional support to not cause our bankers to become burned out as they're doing less routinized and more personalized transactions.
Yes, that is a fantastic point because they're going to be dealing with a lot more potentially angry customers or very upset customers or concerned or worried or things like that. And I like how you point out that role is so important because I'm sure you've had this experience before where you've had a big problem with a company or bank and you pick up the phone and try to call and you keep on getting stuck on like a chatbot or an AI agent or something like that. And it's frustrating because you want to be able to talk to a human being. So that is a very important balance to make sure that the bankers are well supported so they can handle all of these high emotional conversations.
Yeah. If the AI can clear away the noise, remove all of the barriers to the banker having to spend a lot of time just doing backroom things, then the banker is really able to provide a very nuanced, very personalized experience. But that creates stress on the banker, and that has to be recognized and respected and addressed.
Absolutely. So we often have seen that sometimes digital only banks, even though we're not talking about that today, struggle with customer retention and loyalty because it's so easier to go somewhere else to get that personalized touch. So how careful do you think banks should be to not lose that personal touch while also taking advantage of the full opportunities that AI and other technologies provide?
They've got to be extremely, extremely careful. Technology can scale service, but only humans can build trust. So this means keeping three guardrails in place. The first is transparency. Always explain why a recommendation or decision is being made. So, we've heard this over our careers where the banker couldn't or didn't want to explain something, and they said, well, I can't explain this. This was a decision made at the headquarters. Well, AI is going to become the new headquarters. It's going to become the who you point the finger at when you don't want to explain the reason or you don't know the reason a decision was made. So part of the AI needs to be able to say, this is why this decision is being made. And this is how you can explain that to your customer who wants to hear it from you and doesn't want their question deflected. The second guardrail is human override. So make sure staff can answer or reverse AI output. Now, my personal concern with this particular guardrail is that a metric is going to be created that is the percentage of time the banker overrode the AI's decision. And that's going to be treated as some kind of negative score for the banker. Can't have that. If the banker feels this is not the right decision for this customer in this context, in this moment, then the banker should be completely empowered to override the AI. And we shouldn't be looking at metrics that penalize the banker when the banker feels the AI hasn't made the appropriate recommendation at that point in time. And that gets into the final guardrail, which is empathy. So put empathy first. Train employees to use AI as preparation, not replacement. So again, let's look at Signature Bank of Georgia. Its fraud protection platform surfaces alerts, but humans decide the outcomes, balancing customer protection and relationship sensitivity. The AI should remove friction, but not feeling. It's the personal touch is what is giving the technology meaning.
I agree with that point, especially, if the AI makes a decision denying a customer a certain service or maybe a loan or something like that, the banker should be able to look at that and make a decision that maybe they are going to override the AI in this case. Maybe they can explain why the AI made this decision. So it's not
Exactly.
kind of this almost soulless just rejection based on
Yeah,
pure numbers.
exactly. You won't need the person if you fall into the trap of just saying the AI made this decision. All I'm doing is telling you. Well, eventually the AI will tell you. It is
Hmm.
the human that looks at the situation, knows the customer, and really is able to say, I'm not going with this recommendation. And from a management point of view, that should be completely fine.
I agree. Absolutely. So I want to end our conversation on kind of a broader topic, because what this really touches into is the balance between the tech and the personal connection. So how do you think banks and branches can find that balance?
Yeah, I think if you think of that situation as a stage play, the AI is the stage crew, the people are the actors. So let AI handle ID verification, scheduling, document prep, and even things like predictive insights and preparing some type of pre-meeting brief so the banker is ready to add value to their interactions with their customers. But give the banker the ability to manage the interaction and improvise like an actor would above and beyond what the AI is recommending that they do. So, in terms of how you measure things, measure outcomes, not just speed or sales, but trust and resolution and satisfaction. So, when banks like Texas National Bank or Bank automates the busy work, their staff spends more time advising and connecting. And that's the balance AI makes so that banking is faster, but humans are better.
That's a great place to end it on. Thank you so much, Mac, for joining us today. And thank you all to everyone for listening in. Bank Customer Experience
And
Podcast.
thank you so much for inviting me back. And anytime you would like to continue these conversations, I'm here.
Perfect. Anytime. Thank you so much.